What if I told you that there are 2 dividend stocks that could fund your dream retirement? Most investors focus on chasing gains, but they forget about the real key to financial freedom: reliable, growing income. In today's video, I'm revealing 2 must-own dividend investments that provide both high yields and strong long-term potential. Stocks that keep the cash flowing no matter what the market does. Stick around, because these picks could be the passport to your dream retirement lifestyle. Whenever I get ready to travel, I always ensure I have the essentials. If you're traveling internationally, you need to make sure that you have packed in your luggage what you need to survive that trip. You also need proper identification, usually your passport. You can get pretty far with just a passport and nothing else. As long as you have a way to access your money, you can buy what you need. If you don't have a passport, you can't enter most other countries. Having a passport is the primary must-own item so you can travel internationally. It makes sense, as a passport is a government document that proves you are who you claim to be and then gives the other countries the ability to track when you enter and exit. A dividend investor's portfolio will have many holdings throughout its lifespan. Yet every portfolio will typically have some must-own investments. Those are investments that the dividend investor buys and never sells over the lifespan of their investing journey, because the opportunity remains strong. In the case of Dimple Developments, where we are income investors, the holding stays in the portfolio because income generated from the investment continues to be wonderful and generous. Today I want to look at 2 must-own dividend investments that can help spur your portfolio's income to new heights. Let's dive in. Pick number 1, UTG Yield, 7.3%. Reaves Utility Income Trust, or UTG, is a closed-end fund that focuses on investing in utilities and critical infrastructure. Among its top holdings are well-known names like Enterprise Products Partners, Energy, and Vistra Corp. Because of its selective nature, UTG has been a wonderful income producer for dividend investors and income investors. With its 7.3% yield, it falls into this nice category where the yield is high enough to be able to be livable, reinvestable, and enjoyable, while being low enough that it's viewed as not being overly risky. Over its entire lifespan, UTG has outperformed the general utility sector and comparably to the broader market index. This is something that very few closed-end funds have achieved. Part of the reason that it's able to have this outperformance is that utilities and infrastructure investments are considered to be very reliable and stable. Historically, utilities provide a strong and growing dividend to their shareholders. Plus, if the utility is run well, they provide lower volatility. When you start mixing in other infrastructure-focused investments like telecoms and oil and gas pipelines, you start seeing additional avenues for income and capital gains. UTG continues to provide an excellent option to buy income from reliable income producers and have widespread exposure to a diversity of different options. Currently, UTG trades very close to its net asset value. This allows you to be able to buy close to dollar for dollar with what the fund could find. However, you have an opportunity to have a much wider exposure than you would most likely be able to achieve on your own. Pick number 2, VICI. Yield 5.3%. VICI Properties Inc. offers reliable dividend growth prospects and is a company that has become a clear leader in its niche. For investors who are looking for a reliable dividend growth style investment that is starting out at a very reasonable yield, VICI is an excellent candidate. VICI originated as a real estate investment trust that specializes in casinos. Originally a holder of properties operated by Caesars Entertainment, it has since expanded its holdings leased to other major casino companies. Its merger with MGP, a real estate investment trust that held a substantial portion of MGM Grand's real estate, cemented it as the largest landlord in the casino industry and completely dominant on the Las Vegas Strip. One challenge with the casino industry is that ownership is hyper-concentrated. While there have been some newcomers to the industry as gambling has been legalized in various states, the licensing requirements, political barriers, and high capital requirements provide substantial barriers to new competition. Recently, VICI has worked to diversify beyond just casinos, adding 43 non-gaming properties to the portfolio. This has allowed them to expand to 13 tenants. VICI's business is centered around very long-term leases, with an average lease term of over 40 years. This provides stability and predictable growth. With VICI, investors should expect slow and steady growth. In 2024, VICI had adjusted funds from operations of $2.26 per share, up approximately 5% from $2.15 per share in 2023. Guidance for 2025 is for adjusted funds from operations growth of 3.3% at the midpoint. Investors can generally anticipate 3 to 5% annual growth, with 3% representing organic growth driven by the portfolio and 5% or higher representing opportunistic growth fueled by issuing equity. Management has a history of beating initial guidance, but that is dependent upon the opportunities presented throughout the year. VICI is currently trading under 13.5 times price to adjusted funds from operations. We believe VICI would be fairly valued around 17 times price to adjusted funds from operations, which would imply a share price of approximately $40 per share. With UTG and VICI, we can have two excellent income holdings within your portfolio. Both of these investments provide strong yields that have grown with time and also provide an avenue to see strong capital gains as we look forward to the future. VICI has been an excellently run real estate investment trust that focuses on casinos and is now broadening its asset base to enable it to continue to provide strong dividend growth. UTG is well positioned to survive any economic uncertainty that may come our way by holding the building blocks of the American economy. When it comes to retirement, you don't need to have the most exciting things in your portfolio to have the most exciting retirement. Your portfolio should be as straightforward and simple as possible to enable you to have the most exciting and wonderful retirement. Every single month, you can collect dividends into your portfolio from the market that gives you the cash to do whatever you want, whether that is to visit the Great Wall of China, jumping out of a helicopter into the Grand Canyon, or simply staying home and enjoying a crackling fire, drinking tea with your loved ones. The options are endless when you have cash pouring into your account. Keep the excitement in your retirement, not in your portfolio. That's the beauty of my income method. That's the beauty of income investing.